Hi, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what is happening throughout the week in the stock market. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. Friendly reminder that this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email, social media comment section, and please subscribe to our YouTube channel. So let's get after it. So today is actually Saturday, 9/21/2019, the weekend report. Will the resilience in the stock market last? It was a busy week, as many of you probably saw in the news, from getting horrendous earnings from FedEx, which was one of the worst earnings reports that I've seen and heard in a long time. So that's a little concerning because many will view that as a bellwether for how trade is going and how it is actually impacting companies. Regardless, the market did remain resilient through all this. Also, Wednesday, we had the Fed meeting, kind of a mixed guidance. We also had quad witching, and finally Friday, which kind of sent us into a little bit of a sell-off, very mild, not a big deal. China basically canceled the U.S. farm visit and cut the trip short. So considering all the crap that happened, we held up quite well. Resilience is pretty impressive. I do believe there's a little bit of complacency short term, which does concern me. But keep in mind, as previously commented, the president tends to play hardball near all-time highs. This is a consistent theme that I continue to see. Hopefully we get some small wins along the way, which will eventually hopefully lead to a larger deal. We continue to get a lot of mixed signals, but healthy price action. Technicals look very good. This could set up very well for a fundamental breakout. So keep that in mind. Do not let all-time highs scare you. We've been in a 1.5-year consolidation. I want to show that to you. Let's show that to you right now. All right, we are finally there. And I want to show you the performance for the week. Again, pretty non-eventful week. I shouldn't say that. It was very eventful, but not a lot of movement. We closed a lot of the past 8 days have been in a very narrow price range, but you're seeing very mild movement here. Basically, most of this is in the last day or two. So what I was basically saying last week was wouldn't be surprised to see gold, silver, and the TLT have a nice week because short term they were oversold. Doesn't mean I'm, interested in those long term, but I do actually, full disclosure, have some gold and silver. Those are trades. They're not investments. I do not want to hold those long term, but during concerning times, I do want to have some exposure there. It's not physical gold. It is the price of gold. I want to make that very clear. And sector performance. For the week, conservative areas did make a comeback. Utilities and real estate. Again, the areas I want to see build a base, and it is improving, and I'll show this in charts shortly, is areas like technology, communication services, and consumer discretionary lead. Those areas are still a little bit, they're trying to build bases, but still not great price action there. It's improving. But I would not be surprised if the general market sees a little bit of a dip, test lower, and go higher. I'm very bullish midterm, but I do believe some consolidation during some complacency needs to see a little bit of a dip. But again, we will be open-minded regardless. We don't have a crystal ball, but it would not surprise me to see this knowing what we are seeing in the news currently. So keep that in mind, but let's hit the charts. Key levels that we're watching, we've talked about these for quite some time. Resistance above, we've been hitting the 30-20 for quite some time and struggle to get there or get past there. Another key resistance area, since we did close below this, is 3,005. This area right here, if we test below the 2987 level to 2980 level, this range is going to be kind of fight or flight area in my opinion. If we go above that, can consolidate there and go higher. watch out. It's going to be a nice breakout in my opinion. If we go below that, it's keep an open mind to lower testing back into this August range, which was brutal. But interesting enough, last 8 days, look how close this range is. So a lot of emotions are very, very high for investors right now. But really, if you look at end of day pricing, there has been like no movement. So keep that in mind. Another good thing that I like to see is RSI is remaining above 50. Wouldn't be surprised to test relative strength index of 50. Hopefully would then move higher. You're like, whoa, that's a big red bar. This is quad witching. Do not pay too much attention to volume on an expiration date of 4 different areas. I don't want to focus on that too much. We want to see how it pans out realistically in the next couple weeks. Would not be surprised, honestly, in the next couple weeks if we add quite a bit to the stock market. So let's hit the next chart. Let's get moving. We got to try to keep these a little shorter so people don't get bored of 20-minute videos. So we'll try to make these concise and to the point as possible. Here was an interesting chart. Full disclosure, Chris created this. I replicated it essentially, but I do want to give credit where credit is due. His stuff is fantastic. His details are down here. You can follow him on Twitter. Great stuff every week. You're seeing here, I want to reiterate, people that are like, I'm going to sell at all-time highs, that is not a great reason to sell. Period. Usually the market continues to go past all-time highs, and this is a reoccurring theme, and I think it's a great chart to pay attention to from a technical standpoint. Look at the periods first of all, let me take a step back. This is the National Association of Active Investment Managers weekly survey of overall exposure to equities. So basically, essentially, investment advisors have about 77% of their portfolios in equities. Look what happened when we were at these levels after, a period of consolidation, which again, some people are saying we are overvalued here in 2019. Guys, we're at the same level we were at this time of year last year. And of course, it brings back some memories. October to December was that huge 20% dip. Guys, this is consolidation that usually leads to higher pricing. I'm not saying we don't see a little short-term dip first, but this tends to be a great opportunity based on history. So keep that in mind. Be open-minded to that. As you're seeing, when we had this consolidation, we're at this same level of exposure to equities. Good things tend to happen. This is the S&P 500 down here. Nice move higher. Significant move higher. Again, what are we seeing here? Basically, the last year and a half has been a year of consolidation. Huge fluctuation, sideways movement now, and hopefully we see periods like this. It's very possible that we do. Last week, we showed you that there was a divergence, a pretty significant divergence between value stocks and momentum stocks. What we expected to happen was to see these converge a little bit, and that is what happened. You're seeing basically last week, value was basically up like 3 or so percent, and momentum was down 1 to 2%, and these did converge a little bit, as you can see, which is good to see. I want to see those bases being established in some of the momentum names. I think the market will be driven by growth names. So I'm starting to see some good signs here, which makes me feel better. The Dow Transports. Let's take a look. Again, a quick recap here. We said down here, hey, usually test this level. Let's bounce. Let's see if we get a bounce. We got a huge bounce. And I basically even said 10% move in less than a month. Be careful here. This was the last week. RSI was getting a little high. And we did sell off. Not sell off, but we saw some consolidation. Again, why did it go down so much? Well, FedEx is also in this type of index. So, a 14% dip in a week is definitely going to impact some areas. But nonetheless, what we thought would happen, we saw a breather. So we're really starting to see some good signs, some breathers, and would not be surprised in the next couple of weeks if we get back in. The fear index, we talked about this. Key levels, basically below 14. Something crazy in the market's likely going to happen, period. You're seeing Friday, there was some more fear. Why? Because China basically cut the meeting short and said, we're out of here. we tend to see good things happen when the VIX remains in the 16 to 14 range. So right now, the VIX is in the 15 range, though I would not be surprised if we see a little boost in the VIX in the next couple weeks. Keep in mind that the first earnings reports are coming out of banks. So that could be, we're going to get hit with a bang there. You're going to quickly realize if the market's going to take off or we need a little more consolidation. So we are definitely not out of the woods yet, my friends. The 10-year treasury, again, this was an area we said, hey, this is a quick move up in treasuries. Wouldn't be surprised if we see a little move down and silver go up. That is what has happened. So again, this was as of last week. In a 2-week period, we saw a 25% move higher right here. This was last week, and we did go lower. So testing RSI level right here of 50. It'll be an interesting week. We are far from out of the woods, but good things are showing up. Put call ratio to kind of give you a summary here. We are right at the average. You're seeing that there is definitely a tug of war going on right now as we speak between bulls and bears. And there should be. There's a lot of good things showing up from a fundamental standpoint and technical standpoint. I like going into earnings seasons where there's low expectations. So technicals basically kept us afloat during this concerning period. I did not time it perfectly, full disclosure, but I was fine to do that because we were outperforming from a 2.5 year perspective. So it was something where I was saying I'm willing to take some off the table to miss out on some. So one more chart, I believe, where there could be opportunity next. Usually I'm not a fan of healthcare. It's just not done well for me, but it can do well in a dividend portfolio. So it is at some key levels here, right at 92, as you can see here, 92. Drug makers' price negotiation bill is dying in the Senate. Is it time to buy XLV and miss political? Is it essentially worth the political risk? It might be an opportunity knowing there's going to be some ups and downs. And usually, I'm not saying to invest in XLV. I look at names inside of these to say which names do I want to buy. But just industry sector driven, it is interesting to see if we break out of this. This could be really, really good for healthcare. You're seeing periods of RSI. When we get above RSI of 50, good things tend to happen. Look here, when we're above 50, boom, these are nice moves from here to here. I mean, these are nice moves. Then we back down, consolidation. Hopefully we get a breakout here. If not, I believe the entire market will take a little breather. So let's conclude here. So again, we are in a tug of war. Remember, it does not pay off to be bearish on the market for long periods of time. I don't care what's going in the market. You are not going to do well if you sit money in cash for long periods. People are consistently adding to the market. I believe there are better times, healthy markets and unhealthy markets, to get monies in. But most people are buying in regardless of what the market is doing, and they will tend to do completely fine that way. So keep that in mind, that the market, people continuously say, the market, what goes up must come down. Really, in the market, it should be a reverse conversation. What goes down must come up. I mean, that's just the reality. I think people need to shift that. The 2008 recession whisperers are getting in people's minds, and it causes a lot of fear. The consolidation that we're seeing is actually very good price action. I got to be honest about that. So we will likely be getting in shortly. Expect to see the 2887 to 3020 area continue to be tested. I believe our clients are in a really good position where we basically said we're not going to be pigs and get slaughtered. We took some gains off, missed a couple percentage points, but we are completely fine and ready to pounce. And I believe that time is near. So keep that in mind. As always, we look forward to giving you a balanced approach, the good and the bad. Every day in the market presents new learnings. We would not be surprised if we get an opportunity to pounce on in the next week or two, like we said. We will keep an eye on the drama next week and keep you apprised. Have a great weekend and call if you have questions. Again, a thought I want to leave you with. We are near all-time highs. Housing starts hit their highest level since 2007. Unemployment extremely low, and the Fed is cutting rates. Low expectations going to earnings seasons. This tends to be a really good backdrop. Midterm, short-term, I'm a little concerned, but really what we're seeing is very healthy. So keep this in mind. We appreciate your trust. Have a great weekend and hope these are helpful. If you do have questions, want me to check out specific individual stocks, give my opinion, happy to help out there. Thanks again. Have a great weekend.